It's Quant Trade Edge, and we had a very exciting afternoon with the FOMC meeting and the subsequent market reactions. Just wanted to hone in on a couple of reactions that I focused on, and I didn't really get in front of the screen until 10 minutes before the FOMC, because usually days before the FOMC, things are pretty choppy, fake tests both ways. So did myself a favor and stayed away. This is a chart of gold, and I just wanted to point out on the daily chart, if you did your homework yesterday after the close, that means before this green bar, that's a pretty bearish looking setup. It's kind of an umbrella. After this impulse down, this is consolidation, and one would expect that to break pretty decently. But of course, it's FOMC day, so the fact that that broke before the FOMC news was a decent sign that it was a trap. And if you go down on a 15-minute chart, I'll take these MAs off for now. We need them later when we look at the indices. But this is our very famous Albrook's flat flag. Right here, that's pretty flat. You're talking about 95.1 to 92.6, $2.50. That was that entire range. So after this impulse down, this little correction, this little flag, it's almost like a inverse cup and handle. If you think of this as your cup, this is your handle, you would expect this to have a lot of legs. But the fact that very quickly it came up and within a few bars took out the high of that consolidation right here, that would give you an entry on a normal day. It's just that with the FOMC, I don't know that you would want to engage. But really, even this stop here at 93.5, and it did go to 93.4. So that is, another reason why you don't really engage ahead of FOMC. But, as soon as you've taken out the high of that bar, this little consolidation is typically your risk lever to trade to the long side. Now, we had this big move up after FOMC. Of course, it could have been either way. There's no way to know that ahead of time. But this is very strong. And if you notice on the 15-minute, every bar is a GAN up bar, including this one because it's an outside bar. And you didn't get your first down bar until 7 p.m. when Japan opened. And now you are, putting in an ABC of sorts. As strong as this is, I don't know how much it's going to want to give back, but a 30-minute grail would be a gift. This is the 10 MA. Maybe put the 20 in there also. So, this is right now 2037. Perhaps it comes up into this level by the time it touches around 2040, 2041. That would be a good ABC down. Right now, this is a lower low, this is a higher, so we do have two swings on the 30-minute. One down, one up. This is the third down, and it hasn't taken out this low yet, this low being 2044.2. Equal swings, this added to here gets you to 2040 and change, 2040.3, something like that. And again, if this EMA gets there by the time this gets here, that would be a good setup. Let's go look at the indices. And again, you don't have to guess right and catch the initial move. This is the S&P 500 ES futures. And here, I'll take this off. And you can see after we peaked at 205, we had a grail buy in 4 bars. And I called this bar as a climax bar in our chat room. And the reason I did that is if you look at the length of this bar, it's about 11.75. That is higher than every bar here except for this igniting bar. So the fact that we, drifted up, impulsed up, drifted up, and then boom, this big bar, I called it at 208. And you'll see that at 208, oops, that's too far this way. On a 1-minute chart, 208 was right here. So there was still a good amount of downside to capture, or really for me in this type of environment, I don't short this. I just get out of longs and look to reload at another location. And this is kind of where intermarket analysis helped. And I'll show you the Russell first. The Russell has been stronger and was stronger off the Fed news. And it had the same climax bar, where this bar here is greater than each of these bars except for this one that started the rally on the news. So that was my little sign that a pullback was coming. And here there was more of a 3-minute grail. You can kind of see this here. And the thing I wanted to point out in the Russell that was very obvious, and it also happened in the S&P, when you have hoagies, you want to go in the direction of the trend. It's very rare that a hoagie will work against the trend unless it's extended. Like if there was a hoagie up here this far away from the moving average and it broke down, then it's possible that it would work. But here, you know, this whole thing on the 3-minute was a hoagie, and as soon as you broke down and recovered, that's a great entry. You know, and it's also a 3-minute grail. So you kind of got your ABC rhythm, although this is all a hoagie, so this is more of one leg. But you got into your 3-minute grail, you got this, and then if you take it down to a 1 minute, and on days where there is so much volume and activity, the 1 minutes are wonderful. They behave and they do what they're supposed to do. And you know, here you kind of had this, and that hoagie that we saw on the 3-minute is also a hoagie on the 1 minute. So you could have had a quicker entry to it right here, 52.40 against this low of 48.30, so about 4 points. And just this leg up to retest the old high is about 16, 52, 18 points. 4-point stop, 18 points, matter of minutes into 240. On the S&P, EPH 4.5. So again, we had a good grail here, but what really helped me, because this is one leg, this could have really been 2 legs down, but what helped me is seeing that the Russell tagged exactly the 3 and made its turn to the upside with that fake hoagie break. And you know, given that that was the leading market, getting information from that helped trade the lagging market, which in this case was ES. And then I just wanted to show you a risk management tool. And you know, a lot of this has to do with patterns and setups and discipline, but knowing when to ramp up your risk is very important versus knowing when to tread lightly. And of course, your equity curve is one thing that factors that. But here, I believe this was, it wasn't 2 legs on the 1 minute. We had this here, this back up. So it was actually 3 legs. But when it came off of here, I didn't really do anything here, but I noticed, you know, 1427, 1428, 1429, I noticed that the Russell had already made its trap here. So 1427, 1428, 1429, this trap was looking really good, coming right off the 3-minute grail. So, you know, I took the bet on the S&P that we were only getting 1 leg to the downside, and we just finished that. So, but the thing I wanted to point out was, you know, here that we got this 1 leg up, we got this leg down, and by this time, you know, 1431, Russell's already acting really strong. It's already above this base. So I bought this breakout here. So you have this risk here, but then look what happened in the next couple of bars. You broke out and took you in, and then you had these 2 inside bars. And this is kind of where, you know, if you know the structure, you know that there's 2, and if this low were to break, you want to get out because you had an ABC up and you're starting to head down. So I loaded up in here because the stop was extremely tight. I think I put my stop a couple of ticks below this. This low was 44, so 43.50, and it held the 44. And you know, being able to put something on with 4 ticks of risk, you're able to size that pretty well. And then this little leg up here, 55 from 44, that's about 11 points. So on a 1 minute chart in a few minutes to be able to get 11 times your risk just by noticing this structure and knowing that it can't take that out. If it takes that out, you don't want anything to do with it. So that gives you a very tight stop, allowing you to size up this move here. And, for the, let's go back to the 5-minute. When you look at this as a grail, it's a lot simpler. It went up A, B, C, and it got a full retest. This high is 64 and a quarter. This high is 63.75, so a little bit less than that. And again, if you were trading today, you noticed how much FOMO there was, how violent this move was, how there must either be shorts that are caught short or longs that are underinvested jumping in. You can feel the emotion. And what happens on a day like this is there are a lot of individual investors who their only means of investing is their 401k or certain mutual funds in an IRA. So what do? They're feeling FOMO all the way from 1 o'clock to 2:05, and then they're starting to feel FOMO again, 2:40, 2:45, 2:50. So they put in their order at some point today to buy their mutual fund, and they don't get executed till the close. They are guaranteed the closing price, and that closing price is right here at 4760.75. And this MOC started a little early. Typically, I say look for the 1455 bar to get started, but really here, given that this was one wave down, this is a hoagie here, so that doesn't count. So one wave down, and then this was an up bar, so that's an up bar, and this was a down bar. I cheated and got in early right here because we had a very clean ABC on one. And here what I'll do is I'll take these lines off and put the Gann indicator back. Oops, we'll just take this off too. But as clean as this was, so from this move here, we had a down to here. So remember, this up doesn't count because this is a hoagie. So this down to here, up to here, down to here. And that's a very clean ABC on the 1 minute. And given how much volume that we had, that was an acceptable time frame. So once I got in here, I added, I want to say probably on this bar, just because the close was so close to here, and I was trailing bars because that's what the MOC trade does. It just trails the lows of these bars and then gets out on that close right there on the 1459, which means exactly at 3 o'clock. And so again, that's just another trade. If you're sitting around and trading and can see the psychology of what's going on and know that there are people surprised on a day like this, you're typically going to get a one-way move, either to the upside or the downside, more likely the upside, because the psychology of what happened today would make people want to hit buy on their 401ks. And, they may hit buy somewhere here, but they're going to get filled at this price. And that's one of the largest inefficiencies I see in our capital markets, but it's deep capture. Mom and pop have a long time frame on their mutual funds, so they're not complaining to anybody about it. And the Fidelities of the world are getting executioners to help them execute into this to make sure they can track, and those executioners are making a profit. I don't make the rules. I just follow what I see. So that about wraps it up for today. There was some interesting pattern in the Australian dollar. DA6C3. Yeah, so if you look at the high-low of day, we just had a really nice box consolidation right here. And it's really more than a box. It was more of a triangle. And this bar that ticked below is 630. And, it's a decent move up, 29 ticks. 29 plus 25, 54 ticks for having, even if you waited for the breakout. I just bought in the range after I saw this series of higher lows. But even if you use the whole range as a stop, you're talking about 53 to 69. So 16 points and you got 59. So that's over 3R for a nice slow moving market. that has very low margin. Surprisingly, I didn't realize how low that was. I'm able to do probably 7 times the amount of contracts here that I can than what I could do in gold or crude. Um, but yeah, that's about it for tonight. We're making progress on uh, the Discord, and shout out to Madge B for really helping with that, and hopefully we'll get that up and running by the new year.